So, good morning, ladies and gentlemen, and welcome to day 2 of the Asia Economic Dialogue 2025. And if yesterday was anything to go by, then today promises to be just as inspiring, just as provocative, and just as impactful. So yesterday we painted the scene for the theme of economic resilience and resurgence in an era of fragmentation. Our inaugural panel set the sails and the direction for this journey. Dr. Mashalka illustrated this beautifully with the example of DeepSeek, showing how innovation can redefine economic resilience in a matter of days. Minister Piyush Goyal spoke candidly about inequality amidst global conflicts, but emphasized that India is well poised to navigate these challenges thanks to its demographic dividend. He reminded us that India's STEM graduates, both male and female, will steer the nation into the future. Both Minister Goyal and Kiran Mazumdar-Shaw highlighted that quality, productivity, and excellence are really the key, the fuel, which should propel India's ship forward, ensuring it can weather any global storm. Perhaps best summarized, the path to resilience is like navigating a ship through turbulent seas, powered by speed, steered by scale, guided by skill, and kept afloat by a mindset shift that can weather any storm. And let's take that mindset into today as we navigate the blue economy, AI, automation, Africa transformation, and the future of international monetary systems. So I hope you're ready to dive in, challenge assumptions, and shape the future once again. And let's turn to somebody now who has consistently chosen to dive in, challenge assumptions, and shape the future with vision and leadership. I've been told by him not to give a big introduction, but I think there's a few things that have to be said. Sanjiv Bajaj, as the chairman and managing director of Bajaj Finserv, has been instrumental in transforming the company into a diversified financial powerhouse. Under his leadership, Bajaj Finserv has expanded its footprint across various sectors, including lending, insurance, and asset management. And in a brief conversation we had this morning, Sanjiv reminded me that Bajaj Finserv's growth is the story of India's growth too, with the middle income population growing, with the digital stack and the infrastructure. That's really what's given credence to what he's been able to create. In recognition of his contributions, Sanjiv Bajaj has received prestigious awards, including the AIMA JRD Tata Corporate Leadership Award for 2023 and the Lakshmipat Singhania IIM Lucknow National Leadership Award presented by the Honorable President of India. His influence goes far beyond this. He played a pivotal role with being the president of CII in 22-23, and he was a member of the steering committee for the B20 as India's presidency of the G20. I would now like to welcome Sanjiv Bajaj on stage, along with Rama Bijapurka, to lead this fireside chat. Please give him a big round of applause.
And I'm absolutely delighted, Sanjiv, because I'm an admirer of Bajaj Finserv. I'm a teeny shareholder who's also very happy. So I'm delighted to be able to do this talk. So we have half an hour, so it's going to be a bit rapid, and we'd like to take as many audience questions as Sanjiv has the patience to do, and to take it from there. So the thing on everybody's minds and this conference is about this likely global reset. How likely, what it's going to be, we're still not clear. But clearly there is a reset in ideology and actions around the world. So as a business leader, and as the leader of a business that represents the heartbeat of India, the central nervous system of India, how do you actually see this in the context of your business? And do you think that we should be moving, as a country, our policy and business mind spaces, mind maps, in order to cope with this? That's really my first question to you.
Thanks, Rama, and morning everyone. Great to be here, and thank you for inviting me to be here. As I was telling Rama, I'm the local Puneite. She's the celebrity, so it's great to be in this fireside chat with her. I'm sure you've heard some great speakers yesterday, you will today and tomorrow as well. The reality is that we are in a period of significant, we continue to be in a period of significant uncertainty. In this case, the trigger, as we know, is the new US administration, where earlier you would plan for the decade or plan for a year or plan for a quarter. You're planning now every 24 hours because every time we wake up, there are a set of announcements made the previous day and we have to react to that. Now, what's important is while a lot of what Trump is doing, and he's doing as what he believes is right for America. We can all have a judgment, is it right or wrong? But he's at least doing what he said he would do. To me, what is relevant as we are seeing the kind of announcements that have been made since January 20th, is that these will not only have a tactical impact for the world, many of those changes will have a strategic long-term impact. Very simply, if you look at the tariffs announced in Trump 1, during the Biden era, they were not removed. Most of them continued. The animosity with China and the high tariffs continued. There was no rapprochement in those 4 years. If at all, Trump has tried to do the rapprochement. And I'm not here as a fan of Trump or anybody else. The point I'm trying to make is that sometimes when you take these actions, their impact is there more long term. So the world, in many ways, is hoping that this is only 4 years of disarray. It may not be. Now, what does that mean for us in India? Clearly, as we have seen after our Prime Minister went, they're hoping for some sort of a mini trade deal which balances the concerns of the US, balances opportunities that India sees as well. But we'll know more in the coming months. I actually think that this could trigger the next few decades of liberalization for India. Our first trigger came, as we know, after 91. That trigger has helped us over 25 years or 30 years now get to a 6 to 7% growth rate on average. We've had a few years up and down, but the DNA of our economic liberalization framework is a 6 to 7% growth rate. And it's a great growth rate for a country of our size. However, what we need is a 8 to 10% growth rate for the next 20 years, for the size of our population, for employment, etc., etc. We all know that. The current framework of economic reform will not lend to steady 8 to 10% growth. This requires the next set of reforms and really requires significant amount of liberalization in the states. As we say as Indian business, before you opened up liberalization on the external side, how about opening up internally? The logistics cost for producing anything in the Western world or in Southeast Asia is between 6 to 8% of production. In India, it is 15 to 16%, 10% additional cost. Now, that is improving in the last few years with better infrastructure. But this could trigger, because if we have to cut duty rates, it's not only going to happen with the US, because then the EU is looking, the UK is looking. So it is going to cause dramatic change. It will, of course, cause a shake-up, but I believe it will be positive for India going forward, one. Second, we have the advantage of a very large middle class. You've written about it over the years and the expansion at the bottom of the pyramid. We are in financial services seeing the benefit of that now. See, as a per capita, we had about $2,700, $2,800. What we've seen is as countries get to an average of $3,000, people are earning enough, the middle class is earning enough, where their house, their car, children's education, a little bit of health, that money is taken care of. The savings now start going into financial products. As it does, it starts creating new speed in the engine of the economy. And I actually see that unless we mess it up ourselves, the next 10, 20 years can be dramatically positive for India. But we have to unshackle ourselves. We have to be globally competitive. But that's the opportunity I see.
So the demand side is very clear, and I think you've demonstrated it. But on the supply side, in terms of liquidity, money, access to capital in the new world, are we okay? Or should we be worried a little bit? Because the amount that this country can consume is huge.
You know, I've always believed that for a Atmanirbhar Bharat, you first need an Atmanirbhar domestic financial services industry. No developed country became developed just by relying on outside capital. Of course, we want to encourage all the FDI that we can get, and we want a clear path with no retrospective action so that they earn an adequate return. But we have to ensure that we channelize more and more of our domestic savings into productive assets. See, everybody needs a house, you invest in the house, you need a car, you have some other assets. But we must keep in mind these are all eventually dead assets because you're not trading on your house. Whereas if you're saving in a insurance policy, in a mutual fund, even with the bank, that money moves because they onward use it as well. And that's what creates a multiplier effect in the economy. So we have to ensure that our policies are conducive to creating a much larger domestic financial services base, much more steady liquidity. And for this, we have to take certain balanced calls, and I know it's not easy whether you're the government or the regulator, on growth, on where do you want to be on inflation, where do you want to be on currency. For example, at times we feel that a strong currency is a strong country. But a strong currency is a strong country once you're $10,000-$15,000 per capita, not when you're $2,700 per capita. At that point of time, the weaker currency is what helps you grow. It's what makes imports more expensive. It is what makes exports cheaper. And that's how we have seen economies grow all over the world. So I think, and we have many economists over here, what we really need is for smart, experienced people working with the government to put together a roadmap for the next 10 years. Because otherwise it can get confusing. And we have to keep in mind that every government eventually is useful only if they survive. So they will always make sure that they survive to enable progress. And in that, we all know with election, every time election comes up, they have to navigate, they have to give some freebies and stuff. But a balanced view around this is very important, and they know that as well. So these kind of conclaves, the public discussion that we have is very important to give them also the support that these are the right things to do for the economy.
So yes, I think that Atmanirbhar is also about having enough growth to have enough capital surpluses in the household sector. Our financial services have done actually pretty well in the last 2 decades. I mean, I think we've widened, we've deepened, we've digitalized. I remember the days when we used to talk about cost-income ratios for rural banking and stuff. We don't hear that anymore. So what's the next, if you look at the next 10 years or 5 years, what's the next set of things for the financial services industry in terms of, you've talked a little bit about regulation, so regulation, policy, strategy. I mean, what's the next version?
Yeah. So, there are, to me, 3 important changes that we need to make. One, for 1.4, maybe we have 1.5 billion people. Last census was done a long time back. Our spread of financial services has to be a lot more than what it is today. We need many more banks. We need many more large NBFCs. Insurance, already we are seeing large number of insurance companies coming up. And eventually you will need asset management companies as well. Do you know, till about 3 or 4 years ago, 90% of mutual funds were sold in the top 6 cities in the country. India cannot grow if only the top 6 cities are investing. And India is far richer than that now. Of course, we are seeing changes there as well. So one, just penetration. We need many more. Second is really about innovation. Today, a bank is a very monolith entity, and the basic structure of a bank has not changed for 200 years. The digital world is dramatically changing this, and we are seeing a number of countries, whether in Europe, in Southeast Asia, coming out with digital banking, coming out with unique models of banking distinct from the past. Everything has its pluses and minuses, but I would encourage our regulators and the government to think of a sensible manner in which we can allow a lot more innovation in banking and financial services, because that will allow us to reach deeper into India at lower unit costs, use different technology tools to assess credit risk, to make sure that we are providing the right kind of solutions to customers. So innovation is important. I also understand that all our money, a large part of our money, especially of the common man, is lying in banks. And that's where the regulator gets worried, how much innovation do I allow? And I'm not the regulator, and I must say our regulators have done a superb job, we can see even in the last 5 years. But that is something that needs to be solved for. Third is that financial services in India and companies like Bajaj Finance have benefited dramatically by our government's investment in digital public infrastructure. So like the physical public infrastructure, everything from Aadhaar, UPI for payments. Do you know today our monthly UPI transactions in India are close to 16 to 17 billion. That is more than the US monthly, that is more than China monthly, that is more than Europe monthly. It is more than all of them put together monthly. This is happening in India. Look at the ease. You go to buy 2 bananas from the Hath Gadi wala and he'll show you a QR code on his phone. Doesn't happen in too many countries around the world. And all you need to know is otherwise a mobile number. Think at the back end. What is the work that is gone in making this happen? Look at the scalability of that to do 16 to 18 billion transactions a month. Our error rates are dramatically low. Once in a while, it still happens that your UPI transaction will not go through. But that hardly ever happens now. And look at, from the cyber security side, what all stability has to be provided at the back end, because you don't want your money disappearing just because you are using this facility. And this is only one example. Digital KYC, digital bank accounts, the entire National Digital Health Mission, which is digitizing healthcare in India. We already have, I think, close to 200 million health IDs called ABHA IDs. So there is a lot of work that the Indian government has done, and they've taken a very unique position. See, the West, when it creates such infrastructure, it is not free for use for public. It is the MasterCards created the Master and the Visa charging system, the interchange. In India, it is UPI, it is free. Or you have China, where a few large people like the Tencents of the world and the Alibabas of the world created closed ecosystems in which payments and transactions and purchases happen. India took a very different position 20 years ago to say that like we create roads and stuff and it is free to use or at very low charges, same way we will create this, because for a large part of our population at the lower end, they need these services to be free or close to free. But because we are a large country, corporates like us can make enough money on the top 50%. So today, and since everybody's here, I can do a little bit of sales. For UPI, please use Bajaj Pay. But when we host Bajaj Pay, we lose money doing that because we can't earn anything. Unlike Master Visa, where you pay 2%, we lose. However, what it does is it brings tens of millions of Indians onto our platform for where they engage with us for many other products and solutions. So these three changes and how do you propagate this for the next decade will really help financial services grow and become that much more relevant as India is growing.
So my words, not yours. We need a little bit of regulator reform as well to be able to rethink the balance between risk and growth, because I think that's one of the contentions of NBFCs and banks in particular. Last question before I take it to the audience is on a completely different topic, which is, I know you've headed CII, you've had a lot of spokesperson of industry for the country roles that you've had. So it's about skilling. It's fairly clear now that manufacturing is not going to create the number of jobs that it used to in the past, primarily because of the way modern manufacturing works. It also requires a skill set that is significantly upgraded. Similarly, I think services also requires a skill set that is maybe a little better than the average levels of skill in the very modestly educated population we have. We've had many skilling initiatives. There is a big, every time I go to think tanks, there is a debate where some people believe, one side believes that the private sector should step up with skilling. The private sector often says that it's the government's job to make sure that there is skilled manpower available. So where do you weigh in on this? And I know that there is a lot of very interesting skilling work that your group companies do as well as yourselves. So any guru mantras for larger adoption on this, because we need to fix this?
No, we clearly need to fix it. We need many more jobs in this country, and we need many more youngsters who are employable. So both are required. And as you correctly said, the number of people required to produce one widget is reducing because productivity is improving. And it is important that productivity improves because we have to be globally competitive. But what we have to do is we have to increase the size of the pie. If earlier we were producing 100 and that required 100 people and it requires 80 now, we have to produce 200, we have to produce 500, we have to produce 1,000. And that's where one of the things that we need is from our FTAs with different countries around the world to our custom duty structures, to our PLI schemes, to liberalization not only at the central level but even at the state level. All these have to be in sync to ensure that we are competitive and we are able to manufacture not only for ourselves but for the world. So that's important, and that's what will create more jobs. Of course, our domestic consumption industry is also creating more jobs. Second is then, how do you prepare our youth? So for a number of jobs, there are a bunch of colleges that are very apt. And that's why, as I was talking to Dr. Mashalkar just now, he was talking to me about the new Silicon Valley in Pashan with how many research institutes and startups and everything else coming up and hundreds of PhDs over there. So it's not like it doesn't exist. How do you scale this up? As again Dr. Mashalkar says, not by leapfrogging, but by pole vaulting. How do you take it up 1000x? That is where, of course, the role of the government is to prepare on the public side. But I look at it as a businessman to say that if I need 5 inputs for an output, and if one of that is skilled manpower, and if that is not available in sufficient quantity, I can keep complaining about it or I can do something about it. And every time you bloom one flower somewhere, 100 other people see it and bloom 100 other flowers. So I think it's equally important to demonstrate. As a result, as a group, the Bajaj Group evaluated a bunch of areas to get into on the social side, and we've been doing work for almost 100 years now. But last year, we announced a major focus on skilling within our overall social initiatives called Bajaj Beyond. And we've taken on the task over the next 5 years to skill over 20 million youth across manufacturing, financial services. We are doing this directly through a set of initiatives that Bajaj Auto is doing, Bajaj FinServe companies are doing. We've set up a center of excellence on skilling with CII, named after my late father, that will set up 200 skilling units around the country for skilling in manufacturing and services. They've tied up with one of the largest, for example, hospitality colleges in Switzerland for hospitality training. So all kinds of skilling, and we will build this up. And we've done this as part of our social obligation, not only for ourselves, but for India. I was speaking last week with Chandra, the chairman of Tata Group. They're putting a lot of money into skilling as well. And many others are doing this. So I believe that this is key to helping India grow. What is also important is, and this is a little anecdotal, I hope it's not more mass spread, is that you can see a number of business leaders saying, we're not getting people who want to come and work. Little bit negative of this whole digital era has been that for a lot of youngsters, they are spending 3, 4, 5 hours on their smartphones watching YouTube, TikTok, this, that, and stuff. They don't want to go and work. And unfortunately, a lot of work, most work is hard work. There's no easy work. So in a way, people are getting comfortable when they should be working harder. And I won't get into the debate of how many hours in a week.
I know, I was waiting for that.
but our job is to create those opportunities to enable the youth, and hopefully we can attract them then to come and build their own careers, their own futures as well.
Yeah, I think. Thank you. That was really insightful. I'm now going to open it to the audience. Okay, we'll start with the first row, but then we will move to the back rows. I can't see very well, so you just have to wave a little louder, wave a little harder. Please go ahead.
Sanjiv,
Better. Thank you.
thanks for, first of all, making Pune an important hub in the fintech space. We are very proud of that. The trillion-dollar question, and I know I'm stealing Ganesh's thunder for his next session, but how do you see AI disrupting the fintech industry in India, and globally in general, but India in particular?
So let me give you just a couple of examples. And we've been early adopters of AI. We think it will make a significant difference on the front end with consumers, also on the back end with productivity. We have an AI product that we launched below the radar January last year, so over a year now, that actually calls up consumers who have come to us through various channels, email, messaging, calling into our call centers, wanting a particular loan. It will call them back. It will speak in Hindi, English, or English based on the response. It will offer the loan, negotiate the terms, and close the loan, all end-to-end happening digitally without human intervention, with already in the last 12 months lower error rates than if a human were to call on a call center. Of course, we have a human team at the background monitoring it to reduce the noise as it goes on. So imagine the productivity gains from something like this. Second is on service. So today, what we find is that when we get thousands of service requests, and part of it comes through to our voice center. So somebody's dialing in and saying that, can you give me my policy details, my loan, how many months is left for my EMI, I forgot what my monthly EMI is, or whatever question. When they call in, the human call center executive was able to get their question right first time, about 60% of the time. For various reasons, accent, the person is using the wrong words, this person is not as well trained, so can't fully understand. Once they understand the question, then the answer is 98, 99% right, because the system throws up the answer. It's close to 100% right. As we are putting in AI over there, the first time right is jumping up from 60% to 90, 95%, because the tool understands, the tool makes less errors. So these are just two small examples, but I believe the possibilities are endless. There are significant risks around AI as well. There are issues of productivity. Of course, people are worried that, okay, what will happen to manpower if AI is going to do all this? Remember that all these issues were raised when we went from manual manufacturing to mechanized manufacturing, when we went after that to the internet world, then to the digital world. It does cause disruption, it requires reskilling, but new jobs come out as well. And what we have to, that's why work towards, is creating the future for it rather than ignoring it, because the world is not ignoring it.
Shankar, do you have a question?
Sanjiv, what do you think are the most interesting consumer insights? Because we all know macro data, change in household savings, but then you would have insights based on your consumer base. So what, according to you, are the most interesting insights that you have on consumer saving habits, spending habits, or whatever?
So very clearly, a little bit as I mentioned earlier, is as people are getting their first-time jobs, the requirement to have your own house is very, very clear. But interestingly, it is not just through purchasing it. We are seeing with especially the current breed of youngsters in their 20s, many of them are just happy renting. So there is still an older set of consumers, and I would not exclude all youngsters for whom the security of having your own roof is important, but that's not true for many others as well. So this change in habit is clear. Second is that because we are a large country, every sector grows. But when I talk to my own kids, my son, when he turned 18, wanted his driving license because he wanted to drive a car. My daughter is 26. As much as we pushed her, she got a license, but she says, why do I need to drive a car? I'll just take an Uber. So habits are changing. And while some of these may seem like small changes, they will in 10 years' time become dramatic, which means for industry and for people like us financing or insuring, you have to see what is the business opportunity going ahead. Third, youngsters in the last 15, 20 years exceedingly entrepreneurial, exceedingly confident. We all know that when we got our jobs, we all hoped that you would retire in those jobs, or at least you'd be there for 10, 20 years. The job security is very high. Today, job security is taken for granted. People will jump in 3 years and 5 years. Traditionally, what you talked about, loyalty to the company, that is switched now to the opportunity you create to have those youngsters working with you. So that traditional loyalty is replaced by opportunity, by innovation, by the excitement of being there. Otherwise, they will leave the job, go somewhere else, start something of their own. And that's where I think this alternate capital availability, venture capital, private equity, and we've got some leaders here involved in that, has played a very big difference in creating the confidence for the youth in the new India. So that's clearly a change that we see. Of course, the most popular product that people want to buy is a smartphone, because in the earlier days, what used to be your house, nicely painted and all, we could see all the Asian Paint ads and stuff that everybody's looking at your house, or a nice car. Now it's really what you take out and put on the table when you're sitting with a bunch of people. We are one of the largest financiers of smartphones in the country, and we see those change in habits where people will change their phones every 2 years, even though you don't need to for 4 years, because that's a status symbol. So these are some of the
So Sanjiv,
changes.
if you say any more of that, no one's going to buy my books, so I beg you to stop. The gentleman there, and then, you've got the mic, whoever's got the mic, go ahead.
Sanjiv, this is Shankar here. I want to go back to the AI question. You said that AI will also create new kinds of jobs. So in your experience, since you're testing out these systems, what kind of new jobs are being created?
So, just prompt creators. See, keep in mind that in the past, you had to have a very high level of expertise in your technology teams to do technology work. India, and to Rama's point that, increasingly you may see a lot more services jobs coming. India is becoming the hub. Pune has become the hub for India for what are those global capability centers. These are all technical jobs being done for customers globally. Now, you needed a very high level of education to work in those teams. Today, what AI has done using natural language, and I'm simplifying it naturally, but using natural language, a lot more people can do the same job. So what will happen is that those specialized technology, I'm saying, but I'm not saying for end technology sake, but the technology high-end skills will become more and more specialized because we have the whole world to cater to. Even there, you'll see a large growth in jobs, but will become a lot more paying, high paying. But there'll be a whole middle section there which doesn't need the same level of education on technology side that will be able to do technology services. Now, it is for us to find them that opportunity. So something simple, just writing prompts, which is what you need to do to get the answers out of AI, is much simpler to do than coding earlier. Look at influencers. Today, whether financial services, influencers on travel, literally through COVID and now in the last 5 years, if you talk to the younger generation, a lot of what they buy, where they travel, what they discuss is influenced by these influencers on Insta and very other social media. Those jobs didn't exist earlier. So these are still early days for AI. You'll see a lot more new types of jobs coming out which we can't think of today. But these are some examples.
Thank you. I'm so sorry, time's up, but I know the gentleman had his hand up. Is it a short question? A quick question? Do you have the mic? Sorry, Sanjiv, another 2 minutes, and then...
Yeah, so this question is about consumer financing is pretty much, I think, solved thanks to technology. But SME financing
Thanks to Bajaj
continues,
FinServe.
Yes, and thanks to Bajaj FinServe, clearly. Not just financing, but wealth management and all the other associated financial services. But SME financing continues to be a big, sort of unsolved area yet. Do you see, you talked about differentiated new business models and regulatory changes, etc. Do you see there being a case for a digital-only bank which is focused on SMEs and small businesses?
So two different things. One, what can be done for greater penetration for SME financing? And second, what is the model for it? So we don't have time for the model for it. But on the first part, so we have a very large SME financing book as well. 30% of our business is SME financing. Again, what has helped is the digital public infrastructure stack. So for example, we've been using data from something called OCEN. What the government has done is created a digital platform where working capital flows of SMEs are visible for those people that want to lend. On top of it, as you know, you have ONDC, which is like a Amazon, but government set protocol, so it's free. You don't pay, as a SME, pay 30% that you pay to Amazon, or whatever that percentage is. So this platform is where today a significant amount of people are using it because it's zero cost. Third, the entire GSTN network is now available and can be integrated. So if I can see the GST flows of an SME prospective borrower, I know what I can lend to them. And fourth is something called as an account aggregator framework, where if you're an individual or an SME and you want a loan, I can ping you a text message which you click and it opens up all your bank accounts. You can choose which of those bank account statements to share with me. I get that for the last 6 months, for a year, and through the value of the loan. So I can see from your bank account what are your inflows and outflows, and based on that assess credit and give you a loan. Now all this is democratizing credit for the borrower, whether an individual or an SME. What we need is more and more lenders to use this. For example, just as Bajaj Finance, we are almost 20% of the usage of account aggregator on a monthly basis, whereas our overall market share in credit is 2.5%. So as more and more people get digital and use this, you will see the benefits of this coming.
Wonderful.
Thanks.
Thank you very much. Thank you for that.
Thank you.
Thank you all to the audience. Apologies to the next panel.
Thank you so much. Could I invite Ambassador Gautam Bambavale up on the stage to present Sanjiv a small token of appreciation?